What is up, traders? My name is Malik Popal. This is Firewater Trading. Today I'm going to show you my step-by-step process for entering in the lower time frame, scalping the gold market. I hope this video is of value to you. As you can see, I'm a fresh channel, and all I'm trying to do out here is provide value to you guys. So if you do get value out of this, why not support me by putting a comment below of what you learned or what inspired you, and give us a subscribe. Let's dive straight into the charts and show you what I got cooking over here. So this is my step-by-step process. Let's dive in. Guys, simply what I'm doing is I am looking for two key areas of interest, two key levels on high volume market moments for taking either longs or shorts. I don't have a particular bias in the market. I'm not just looking for buys once I've done my analysis. It could be long or short. Whatever the market chooses to show me is the direction of that session. So what we're going to do is a top-down analysis. We'll first look at higher time frame areas of interest, and then we'll go all the way down into lower time frame entry models. On the higher time frames of interest, if we've been just making new highs or new lows, if we've just been trending like crazy, there's a high likelihood that those market volume, these session opens, are going to give us a small pullback. So that's a key area of interest that I'm looking for. High time frame support and resistance, whether it be 1 hour or 4 hour or 15-minute, we're looking at areas in which prices reacted off many times, as either broken out and retested. These significant areas are useful for us for take profits and for areas of reversals. The next thing we're looking for is charged EMAs. If price action is moved for quite a long period of time without interacting with an EMA, there's a high likelihood that institutional traders will find value when price comes and returns to those EMAs. I call them charged. So those EMAs, specifically charged EMAs, are areas where I'm likely to expect some sort of interaction. Then we look at order blocks or impulse levels, so price levels that have shown a high level of trader investment or trader interest, where we've seen some nice strong price action from. Return to those levels will often bring traders back into the market. Then we have our daily levels, the daily high, daily low, and daily open as key liquidity levels, as well as intraday sentiment levels. So that's step one, guys. Step two, we're looking for confluence and alignment. I have my Firewater TDI indicator, which gives me some clarity of what kind of trend we're in, if we're shifting between bearish or bullish. It just helps me simplify the lower time frame price action to give me confidence on what is most likely to occur. We look for Dixie. We look to see if Dixie's trending bearish or bullish at the time of open to give us more confidence in our trades. And then we look at higher time frame candle structure and closure. If all of these things start to align in our direction, it's going to give me a lot of confidence to put money on the table and enter in that trade. The third step that we're going to do is going to set our two key levels. So these two key levels, as I've mentioned, are going to be structure based. We're going to put them at highs and lows. Generally, if these areas correspond to psychological key levels or EMAs or other key levels that I've put into, it's just going to again give me more confidence to draw up those levels. And so once those levels are set, we're going to wait for the market to open, and we're going to look to enter on the lower time frame once price action enters or interacts with those levels. So we're looking for an impulse to break that level, or we're looking to catch the impulse that breaks that level. And these are the two different entry models that I have. So the first entry model is a 3A. So once that key level is broken, we're going to look for a pullback. That pullback, we're going to observe price action, and we're going to look for an area of confluence where we believe that some form of support or resistance is going to aid us in creating a good risk management structure. So basically it can be EMAs, low time frame structure, the RSI, or I use a Fibonacci measurement tool to find out where the value area might be. I'll be walking through a trade that I made earlier this week to further demonstrate all these ideas. The next entry model that I have is 3B, and this entry model takes a different type of trading risk tolerance. I use asymmetric risk tolerance with this model, meaning that I have very low tolerance for price action to move against me once I've entered. And the reason is I'm setting a limit order above or below the area of interest, and there needs to be a few things that allow me to enter in this way. The first thing being multiple tests of a certain level. So generally when we've tested a level a few times, and we break that level, it'll generally break with a bit of volume, or we have some lower time frame structure that's supporting it, some EMAs that might be supporting it, or a key psychological level. So if you've got confluence that a break of multiple forms of support or resistance will bring us some nice volume, we're going to set a limit order, because a lot of the time we might not catch the pullback. We might get a lot of volume, not be able to enter in the market. So again, it's the asymmetric risk tolerance is that I'm going to allow maybe 10-15 seconds for that trade to continue. If it doesn't, I'm going to exit out of my position. I can always enter in later. So there is a cost to entering in this way, which means that, you know, generally you might take a small loss just trying the entry model, but more often than not it pays for itself. So that's why it is a valid entry model for me. The fourth or the third entry model I have is about a consolidation breakout, but we're not going to talk too much about that model today. I still need to draw up some graphs demonstrating exactly how I do that. So the last stage of our process, guys, is that we are going to manage our trades, and of course, you know, the trading doesn't just stop once we've decided to enter in a trade. We need to know how to manage ourselves. We need to have a plan for what exactly we do. How do we trail our stops? Where do we get exits? So there's only one real trade management process that I'm going to be focusing on here, which is you can either go straight to your key level, or you can go into drawdown once you've entered the trade. There's only two options. Once we're in drawdown, if we go into some consolidation, I look to manage out of my position, and I then go into that third entry model where I set traps on either side of the tight consolidation. We're talking about 15-second consolidation, guys. We're not talking about like 5 minutes or 1 minute. This will be like maybe over 3 minutes, 4 minutes. We're not moving anyway, but price action starts to get really compressed. So yeah, we can manage out of that. Once we hit a key level, we've got two choices. We can load up a second position, but once we've hit that key level or broken that key level, we'll need to manage risk. We need to reduce risk to a lower time frame support. So yeah, we either get our second position in, we trail the stop, we win both positions, or at some point we get a break even, or we take a small loss. So let's dive into the charts. I'll show you a trade example from earlier this week, and yeah, we'll just go from there. So this is the 1 minute chart here. Let's see here. There you go. This is a 1 minute chart here. I have this indicator here. It shows me higher time frames. We've got the 4 hour, 1 hour, 30 minutes, 15 minute, 5 minute, and so this level here is going to be a key higher time frame support and resistance. As you can see on the 1 hour, we formed a nice support on that level, and it's correlating with the 5 minute, 15 minute, and the 30 minutes, and then we've got a bit of resistance here on the 1 hour, quite a tall area of resistance. So those are those two key levels. Let's look at the EMAs. We've been cruising downwards, so this 15-minute 200 EMA is looking like it's got quite a bit of a charge, so there's quite a lot of orders going to be resting on there. So that's a key level of interest here, seeing as price action is close to that. That's going to be a potential take profit zone for buys, and then this might be a potential profit area for sells. Why is that? Well, it is a recent low. It's also a key psychological level, and price is close to those levels. So we've already determined our two targets here, depending on what entry we get, but that's been super helpful. We've also got the 5 minute 50. Currently we've been trading below, but we've failed to really make lower lows on a higher time frame. So we've had a bearish move here, but it hasn't been too significant. This is the 5 minute 200. Again, that's not showing much charge, but it's looking lethargic because we've tested once, and this is the second test of that level. So yeah, those are our high time frame areas of interest, marked out and labeled. So now we're going to look for more confluence. We're going to go to my my heat map overlay, and we're going to take a little look-see here. As you can see, guys, the heat map overlay really simplifies the lower time frame. It helps me be aware of what might be happening, when it might be happening, and so on and so forth. So basically, we had some nice, strong news movement. It got very bearish, but look here, when we started to shift and show fire on this indicator, it was only then that these bulls came back into the market. If you were trying to buy all of this in this bearish conditions here, you were going to get wicked out. Look, buyers here, stopped out. Maybe we bought here, stopped out. So it was only really here, no stop out, that the buyers started to get in control. So it really helps me recognize when I want to be buying, when I want to be selling. The other thing it shows me is that, look, if we've been trending bullish here for what, 1, 2, 3 hours, there's a good likelihood that we're going to have a pullback. And so this first sign of water is showing me that bears are getting in control of the market. So generally in opens, I'm going to look for, if we've had a long bearish move, for example, like we see here, but we've struggled to really make any progress, I'm assuming that the bulls are probably going to step quite heavily in when we get involved if there's volume in the market. So I'm looking for this 50 zone on the RSI to be crossed. The purple candles represent a potential reversal on the trend. So again, and this bias and this confluence, I'm looking more for buys. And what we're going to do is we're going to draw our levels now, because we've got quite a strong indication of where these levels might be. If we break these lows, there's a good chance that this bearish trend is going to retest this low here, and the volume will probably move us straight through there because there's very little traffic in the way here. So that's a really nice sell target and area to be interested in. And of course, this is going to be our buys, and this is a really strong buy area. Why? Well, because we have lower time frame structure appearing here. We have two EMAs that have been acting as resistance but are getting weak because they've been tested multiple times, and it's also looking like an area in which the fire water indicator might be crossing over. So I'm expecting quite a lot of volume to be crossing on over here. Now, leading into this open, let's look at the high time frame candles. What we've got, guys, we've had a 5-minute type 2, which means we've broken structure on the 5-minute. The 15 minutes looking like it's going to break structure. We've got quite a strong engulfing candle on the 30-minute. And of course, we're wicking up off the support on the 1 hour. So we've got 5 high time frame candles all saying bullish. So at this point, I'm looking pretty bullish. So what I'll do from here is I'm going to go to the 15-second chart, because the 15-second chart is going to give me a lot more fidelity. It's going to give me a lot more detail of what might be going on. This is the same price action here. As you can see, you've only got 3 candles to it. How do you know what's going on? So here we can see very clearly that we are forming some level of support over there. And we're testing this level with quite a lot of whoosh. We've also had a nice strong impulse to come up and test this level. So this hits all the conditions for my 3B entry model, which is we've got multiple levels of support or resistance showing us that there's a high likelihood a break above is going to bring in volume. So we set our limit order above this level, and we put our stop below this area of support, which is giving us a really nice entrance opportunity here, because we've got a clear level of support being created as well as a high probability movement up. So yeah, as you can see, this trade would have done really well. Now, for managing my 3B trades is that I have a very asymmetric risk tolerance, but I also have I also look to take profit quite quickly. If I get a lot of volume that confirms my bias, there's no point me sitting in a pullback in these moves if I'm scalping. If I've reached my profit target of 1 to 1.5 RR, I'm just going to exit my trade, because it's very likely when we break these key levels, we come back to retest them. It's highly probable. And so there's no point for me to gain all of that profit, to give it back, only for the price action to come all the way back to my entrance area, and for me to then stress and wonder about price action structure and to see if it's going to break. No, just take profit once the market gives it to you, especially off this move. I can always enter in my second entry model, which is the 3A. So for the 3A, let's just get the 15-second chart fully visible here. Well, as I've mentioned, there's a few areas of interest that I'm looking for the pullback to. We've had our impulse that broke my key level. Perfect. So I've got the 2 conditions to entering in a 3A. We can either enter in a pullback to an EMA, a low time frame structure, an RSI level, or my golden fib zone. So I'm going to mark out on the chart where all of those areas are, and then I'm going to observe price action once it gets to these areas. So we've obviously got quite a strong impulse, so I've got to be very cautious not to miss this move. We're going to be checking out price action to make sure that we are in the zone here. We get a nice strong pullback into the golden zone. We then get a 15-second doji, which is a really strong confirmation candle showing us that the resistance has been formed on that pullback. We can enter on that. We can have a nice risk management profile here by moving our stop below the 5-minute 50 and the 5-minute 200, as well as this breakout level. So there's quite a lot of confluence by moving our stop there. And of course, our take profit at our original take profit zone, which is the 15-minute 200 target here. So yeah, we can choose to enter and load up into this trade. We're successful in this trade. We've pumped higher. It's great. We can manage risk. We broke structure. We can look to re-enter on a pullback here, saying that at least we're going to retest this high, for example, and then we can have a loaded trade to be in and out of the market, guys, with 2 trade setups in 10 minutes. That's the way I like to trade. That's my step-by-step process to trading. I'll catch you guys on the next video. Have a blessed day, and yeah, man, stay safe.